Hey Forex Fortune Hunters, Tom Wilmot, and I would like to discuss with you in a short video the issues related to the interest rate decision by the FOMC today, September 17th, 2015. Interestingly enough, first of all, it's a Thursday, and I have maintained that one of the reasons they changed the meeting to from Wednesday afternoon when they typically announce until Thursday is that they were still waiting for some data to be released. And if we check here on our Forex Factory, we will find very clearly that yesterday, Wednesday at 8:30, they got CPI information. So as they went into their meeting on Wednesday, they did have notice that there's really no inflationary pressure. Gas prices continue to decline, even though the last couple of days we've had an uptick in oil. And in particular, while full employment is one of the issues that they look at, CPI and inflation is the other of the Fed's mandates. So given that that's not a problem right now, we're in a position to see that only 30% of the economists polled thought the interest rates would go up at this particular meeting. But oftentimes, interestingly enough, that doesn't matter in advance of the interest rate decision. It doesn't matter if it's just the FOMC. We've seen a couple of indications in the past. For example, in New Zealand, even though it was widely publicized that the New Zealand bank was going to reduce interest rates to 2.75 at their last meeting a couple of weeks ago, we saw an increase in the New Zealand dollar in comparison to the US dollar in advance of the decision, and then a complete collapse. Well, in this particular case today, we had exactly the reverse happen, and it happens this way all the time. We had a 5-minute sell zone created here on a 5-minute Australian US dollar chart when we dropped below the T3 Tilson on our EMA 24, when we have a medallion that shows the downtrend in our multiple moving averages. And by the way, there's a separate video published that describes buy and sell zone entries, so please check that one out too in our inventory on Vineyard FX on YouTube. So anyway, here was our sell zone. We had a couple of pullbacks into the bands. The market really couldn't decide going into the London session, represented by this blue line at 3 a.m. Eastern, 8 a.m. London time, what it was going to do next. Sorry for the alerts from another chart. In any event, here we were, and we were headed lower. That's what we know. And we basically use our ability to see the pullback into the bands to set a strategy. In this particular case, we probably draw our stop loss levels right here, kind of in between our chandelier, which separates the resistance from the support, switches when it's breached. But in any event, here's our potential stop loss level here. And you can see even on the times when we took the heat, we didn't really have a problem. And our stop loss level isn't huge here. 5 or 6 pips. You could even move this line higher and use the chandelier as a stop loss if you wanted to. So it doesn't really make any difference which one you use, okay? But anyway, here we are headed downwards. We come back and test a couple of times, but there's really nothing to worry about until your chandelier is taken out. You're in the trade all the way down. Even if you decide to get out down in here, not much is lost in terms of additional profitability. And that's, already 29 or 30 pips, and so that's just a precursor to the announcement itself. We move into the U.S. session, noted by this vertical line, and here we go. Now, coming into the afternoon, things begin to get heated up, and in fact, we have a 5-minute buy zone. The reverse is true. Everything on this side of the line represents an opportunity to go long if you have the right kind of pullback. Now let's take this and switch to a 1-minute chart. First of all, we know that the emerging market currencies are the ones that are really going to have the benefit of an interest rate hold by the Fed. Why is that? Well, they've been having to, especially Australia, respond to the China slowdown and the devaluation of the yuan over the last several weeks and so forth. And so the AUD in particular was quite sensitive to this announcement, and despite the downturn this morning, here we have our beginning at approximately 1 o'clock this afternoon, East Coast time, a beginning 1 minute, and then here again is our 5 minute on the 1 minute chart. We're beginning to go north. Lots of, wondering and watching here and consolidation till the announcement comes. Now, specifically, we don't want to do anything during this. Some people trade it. You really need to button up your shoes and your wallet. You have to be very careful. Typically, what you will see is a big move in one direction, then a pullback, and then a recovery. And so after all of the 4 or 5 minutes is over with, we can see that this is a level we want to respect, as is this one when we had a pullback into the bands that was a more normal set of candles, and a doji here, and then a reversal candle. So what we'll do is we'll take our Fibonacci's, as we've played with and practiced for some number of years, and we'll draw our line from A to B. Now, if this market were going to continue to head south, it would pull back into the mid-range of the Fibonacci here between 618, 61.8 and 38 and 50%. It would have a 50% pullback perhaps. Then it would roll over and dive down here to the 127, the 1618. That could have happened. But in fact, because this was a relief rally for Australian dollar, given that the Fed had given them some breathing room, in fact, we're headed in the other direction. And you'll notice on the fibs over the course of the next 5 or 6 minutes, and it isn't like you're doing 15-second trades. You have some time to collect your wits, to add your fibs. You see 5, 6, 7, 8 minutes come, and you've got this pullback. Here you are, you set your sights on it, and you have a move right up to the 127, which is a typical target for one of these reversal cups that we call. Okay, then we have a pullback into the bands. I've already put the stop loss level here, right around the place that we would find the supporting chandelier and the T3 Tilson moving higher. We have this pullback, and we can see here that this particular candle is closing above at least 4 other candles prior to it, maybe 5, including the green first tick up. Okay, and interestingly enough, our stop loss, if we enter at this level, is 12 pips, 15 pips potentially. On the reverse, up to the 200 level, we have a 54 pip trade, and even if we got out right here at the 200, that's a 45 pip trade, and 15 versus 45 is that 3-1 risk reward level that we're really looking for. If you get nervous at the 618, you can get out of the trade for sure at this level also. Even that trade is a perfectly legitimate one. Up here it's 26 or 27 pips, and so that's basically 2-to-1 kind of a ratio. But notice that we've never pulled back and scared ourselves by touching the EMA 24. This pullback in the stochastic was much lower and reverses more quickly. We never get into the 45-55 bands. We only have one pullback candle on the MACD, and then we're right back where we started and headed higher. Also, until you actually get deep into the bands, this 16, this 12 EMA, 16, 20, 24 EMA, until you get deep into it, that's when you're really beginning to think, I'm oversold now. Is this going to continue to get higher? Are we going to see just a compression of the bands here? Or what's going to happen next? And then you get the reversal and off you go. And this looks like a tide moving out in the ocean. And then finally you get up here, you've hit your targets, you've even passed the 200 line on the Fibonacci reversal chart, and you see I got up here, I cannot any longer maintain that trade, and so I'm headed lower. Now let me just switch, because some people are more comfortable using Fibonacci's in the other direction, and that's perfectly okay too. Here was a pullback into the bands and a reversal. Here was a higher high. We've taken out a chandelier in the process, correct? So now we have a pullback, and all we can do is get back to the 38%. Here's your line right here. Let's move it over and show you. We're above the chandelier. We still have the same pullback areas. We're still in the same situation. And notice how we got to the 1618 on this particular opportunity, which is the typical kind of D target that we'd be looking at. A to B, a pullback to C, oops, sorry, come on, baby, pull back to C, and then on to the D extension. Okay? Now, another thing I've noticed over the years on Fibonacci's is that the first time you hit the 618, you may pull back, test a level, and then the tops tend to go in more slowly than the bottoms. Okay? The top takes another test of this level. And when you can't continue to go, that's when your 1 minute chart shows you you're coming back here. You're actually now in a position where we have a 1 minute sell zone. We have our medallion, we have our resistance chandelier in place, the red one, and notice we have a pull back into the bands and then a move to the south here and continuing down to reverse direction. And once you hit that 1618, delete and start again. And you can see that even if this is just going to be a quick reversal Gartley kind of pattern on an Elliott wave chart, this downward thrust got us all the way to the 200. Notice that we've got a double bottom here. We've got lower momentum on our MACD. We have clearly oversold here, and we're seeming to head higher on our stochastic. I'm not sure I'd recommend right now that we take any kind of consolidation or rebound trade here, but for sure, if we can get this going back up above the on the 1 minute chart, back above the T3, we would be in a position where we could reconsider and think about the fact that this now represents the next opportunity for a cup and a higher price on the odd USD. As we have consolidated, taken it out, we'd have to get through this level here and continue higher, but at the very least, I would expect at this point we may well pull back into this mid-range of Fibonacci. We'll watch in the Asian session to see what happens. Hope that helps. See you in the room.